Innovating for insurance, charting a smarter path to the S&P 500. Adjusting S&P 500 exposure based on volatility levels during the trading day doesn't take a genius. It takes a rules-based index. S&P Dow Jones Indices, a leading provider of market indices for use in insurance products, created the S&P 500 IQ 0.5% decrement index, or S&P 500 IQ index for short, to provide a simple, straightforward path to the 500. The S&P 500 IQ index uses new intraday technology to measure and react to market volatility so it can quickly respond to changing market conditions, increasing S&P 500 exposure when markets are stable and leaning into cash during times of volatility. The S&P 500 IQ index seeks to deliver long-term S&P 500 exposure. The index is intended to provide a similar long-term experience to the 500, but in volatile markets, this exposure will differ due to the S&P 500 IQ index's risk controls when it moves to cash to protect against potential dips. Dynamic allocation. The index uses a smart, rules-based approach to react to volatility during the trading day. Its intraday volatility observation and same-day rebalancing means the index is more nimble than traditional risk control indices, while seeking to provide a more stable volatility experience than the S&P 500. Why is the S&P 500 IQ index built on the S&P 500? The 500 is widely regarded as the best single gauge of large-cap U.S. equities. The iconic index includes 500 leading companies and covers approximately 80% of the available market capitalization, with an estimated $11 trillion either indexed or benchmarked to the index. So, the S&P 500 IQ index is built on a very solid index foundation. But how exactly does it work? Unlike a traditional daily risk control index that rebalances on a 2 to 3 day lag using end-of-day volatility observations, the S&P 500 IQ index measures intraday volatility over a single 5-minute window during the day for same-day rebalancing. The use of intraday rebalancing aims to provide more precise volatility control, allowing the index to move in and out of the S&P 500 based on market volatility. The S&P 500 IQ index's daily rebalancing seeks to maintain a constant 15% volatility target. When intraday volatility is running below the target, the index increases its S&P 500 exposure, up to a maximum leverage of 200%, as it seeks to maximize potential upside. When volatility is running above target, the index decreases its exposure to the S&P 500 and increases its cash exposure in order to protect against potential downside. What does tracking the S&P 500 with enhanced risk management look like in practice? Back-tested data shows the S&P 500 IQ index has delivered similar long-term performance with more stable volatility versus the S&P 500 historically. Compared with traditional risk control indices, the sophisticated risk control mechanisms built into the S&P 500 IQ index provide additional tools for managing volatility during times of market stress. In fact, during March 2020, the S&P 500 IQ index maintained a volatility near the 15% target and was able to react more quickly to a rapidly changing market. During this period, the index's correlation with the S&P 500 adjusted quickly during the early stages of the pandemic before returning to its historical norms. To get smarter about tracking the S&P 500 while targeting a defined volatility level, visit spglobal.com/spdji and explore the S&P 500 IQ index.